Hey guys, this is Mitchell from Optionable. Today we're going to be going over selling options, and we're actually going to be doing a lot of this in our strategies, and we will get a lot more detailed in other videos. Again, this is going to be pretty general, but let's go ahead and get started here. So why sell options? A lot of people get scared off when they first hear about it because in some strategies there's an unlimited loss potential. So there's a multitude of reasons as to why you should sell options. A, hedging, selling covered calls, selling puts. Um, there's a lower risk in many cases as opposed to more advanced strategies like uh, spreads, butterflies, stuff like that. By the book, it's higher risk, but it's lower risk in some cases because you're not capping your loss potential. It's not going to cost you money to roll out in a lot of cases. So there's a higher probability of success over the long term in essence. Additionally, the best part about this strategy is that time works for you instead of against you. You want that contract to expire worthless. So we've got time decay. That's time value of the option contracts deteriorating. It really picks up around 45 days, 30 days, and then you start seeing that option value drop, which you want to happen because you sold it. You want our main goal is for it to expire worthless here. So typically you're going to aim to sell 30 to 45 days out. A lot of times you'll lose theoretically a third of the time value when half of the time has passed. And if you're selling 30 to 45 days out, you want a lower delta around 0.3, 0.25, or 30 or 25, again, depending on which platform you're using. So this will go over that, a third of time value and half the time's passed, sell 30 to 45 days out, and a low delta. The lower the delta, the less money you're going to get, but the less risk you're going to have that you sustain an assignment. So this doesn't really carry over if you're looking at a different time frame. You wouldn't necessarily want to sell at a 30 or 25 delta a week out. Keep in mind, as discussed in our Greeks video, that delta is a lot of times viewed as the probability of something closing in the money. We want this to close out of the money in the strategy. From my experience, when I go 1 week out, I like to do a 0.1 to 0.07 delta. That's got a pretty good probability of success. So that's our brief selling options videos. We're going to get into some more complex strategies in some other videos. Trade safe.